All right, let's get right into it. Today, we're tackling the big one, the IPO for Bharat Coking Coal Limited, or BCCL as you'll hear me call it. Our goal here is pretty simple. We're going to cut through all the hype and help you figure out if this is a smart move for you based on logic, not emotion. So here's the million-dollar question, isn't it? Is the BCCL IPO this incredible golden opportunity to get in on the ground floor of a major player? Or is it a classic cyclical trap, just waiting to catch people off guard? That's exactly what we're going to unpack today. Okay, first things first. Before we can even begin to talk about the IPO, we've got to understand who we're dealing with. Who is BCCL, and why do they even matter so much in the grand scheme of things? So, BCCL is actually a part of the massive Coal India. And their claim to fame? They are the single largest producer of coking coal in the country. Now, you might be thinking, okay, coking coal, so what? Well, it's absolutely essential for making steel. You literally can't run a blast furnace without it. Bottom line, no coking coal, no steel. And that makes BCCL incredibly important. And this chart right here really tells the story. Just look at that. BCCL controls roughly 60% of all the domestic coking coal production in India. That is a huge slice of the pie. It gives you a real sense of their dominance and just how vital they are to the entire steel sector. And just to give you a sense of scale, we're talking about a company that runs 34 different mines and is sitting on nearly 8 billion tons of coal reserves. This is no small-time operation. This is an absolute giant with massive, tangible assets in the ground. Okay, so we know who BCCL is. Now for the next critical piece of the puzzle, the IPO itself. And this brings us to probably the most important question you should ask about any IPO. Where is the money actually going? And this is where we need to understand a key piece of jargon, an offer for sale, or OFS. Now, this is super important. In an OFS, the company itself doesn't see a dime. Instead, it's the existing owners, the promoters, who are selling their personal stake to the public. So the cash from the IPO, it goes right into their pockets, not into the company's bank account. And as you can see here, the BCCL IPO is 100% an offer for sale. Let that sink in. Zero new money is being raised to expand the business, to build new things, or to innovate. It's a complete contrast to a fresh issue where the capital would go straight to the company to fuel its growth. This is a fundamental detail you have to keep in mind. Okay, with that context set, let's look at the other side. Let's build the bull case. What are all the reasons people are getting excited? Why would you want to apply for this IPO? Well, first up, the numbers. The company is pulling in some serious revenue and profits. But the really interesting part here is the valuation. A price-to-earnings ratio of around 8 or 9, well, that doesn't scream expensive, you know? Especially for a big government-owned, commodity-based business like this one. And here it is, the number that's got the market buzzing. The gray market premium, or GMP, is sitting at a whopping 40 to 50%. This basically means there's a huge expectation in the unofficial market that the stock is going to pop big time on listing day. It's a sign of really strong short-term hype. And it's not just hype. You've got some big fish biting. When you see major players like LIC and a bunch of foreign institutions putting their money down at the highest possible price, that's a strong signal of short-term confidence from the so-called smart money. But, and this is a huge but, we have to hit the pause button. It is so important to remember this. The gray market premium is just sentiment. It's market chatter. It is absolutely not a guarantee of anything. That sentiment can change in a heartbeat. So now, let's flip the coin. We've heard the bull case. Now we have to do our due diligence and look at the bear argument. What are the risks? What are the things you absolutely cannot afford to ignore here? It really boils down to 4 main risks. First, the one we've already hammered home. It's an OFS, so no growth capital for the company. Second, this is a business that rides the roller coaster of global steel and coal prices. It's super cyclical. Third, you've got the long-term shadow of the global shift to clean energy. And finally, being a government entity means it's always exposed to sudden policy changes or price controls. So, we've seen the pros and the cons, the bullish excitement and the bearish warnings. How on earth do you make the final call? Well, let's try to build a simple framework to help you decide what's right for you. It really just comes down to one question. What kind of investor are you? Look, if you're a short-term trader and your game is to ride the wave of hype and demand for a potential listing day pop, then yeah, this IPO might fit your strategy. But if you're a long-term investor looking for the next big growth story, this is probably not it. This is more of a value cash flow kind of play, not a high growth. So let's just tally it all up one last time. In the pro column, you've got a strong strategic company at a pretty reasonable valuation with a ton of positive market buzz. But in the con column, you've got the fact that none of this money is for growth and the business is at the mercy of market cycles and government decisions. And that leaves us with the final question you really need to ask yourself. Are you investing here for the short-term pop, hoping to get in and out quickly? Or are you looking for a solid long-term addition to your portfolio? Your answer to that question really tells you everything you need to know. And of course, just our friendly reminder, everything we've talked about today is for educational purposes. Please, please do your own homework, read the official IPO documents, and most importantly, talk to your financial advisor before making any decisions. Thanks for tuning in.